that system, we're in a tough spot because we're either going to have to print the money, monetize the debt, expand the Fed's balance sheet in the face of rising oil prices. You guys have not seen inflation yet if that happens. I can't even begin to explain to you the price of not only Bitcoin, of everything. The current monetary order is failing. The current fiat system is failing. And whether Iran, Russia, and China are going to try and push the world into this gold-backed Chinese yuan, or whether us that believe in Western ideals and open source software are going to pioneer and revolutionize Bitcoin. Understand this. We are entering a timeline where the future is to be defined by you.
U.S. President Donald Trump's Tuesday deadline for Iran to reopen the Strait of Hormuz or face dire consequences is now upon us. Now, the world awaits America's next move, whether the Trump administration will choose to massively escalate the war this week by bombing Iran's power plants, bridges, oil wells, and other civilian infrastructure as previously threatened, or issue more deadlines to draw things out for longer. Whatever the next move is, experts are warning of serious, urgent, and dire consequences for markets and the global economy if this is not contained as soon as possible. According to Peter Berezin, the chief global strategist at BCA Research, the Iran conflict has pushed U.S. recession odds to 40% and could send oil prices even higher, potentially to $200 a barrel. If we have a sustained decrease in global oil production of around 10%, then it's very easy to see oil prices going to $200, Berezin said in a recent interview with David Lynn. He noted that the recession probability for Europe and Japan is even higher, at 50%, mainly because higher oil prices affect their terms of trade more than those of the United States. On social media, experts are drawing parallels between this conflict and the U.S. cutting off Japan's oil at the beginning of World War II. With the U.S. essentially cutting off natural gas, oil, and fertilizer exports to Europe, Australia, and Asia, these regions face the risk of a serious food crisis later this year, which is why many fear this could quickly escalate into another world war. In the latest episode of his weekly podcast, Strike CEO Jack Mallers warns that things are about to escalate massively, way more than many people can imagine at the moment. Mallers is warning of crazy high inflation numbers in and out of the United States, especially if the Fed makes one important move everyone believes they are just on the verge of making. As we bring you clips from Mallers' video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and let's dive right in.
What the hell's going on? This was very sneaky signal. Jerome Powell said that he can look past the oil shock, or not just himself, but the Federal Reserve. Interestingly, he wasn't willing to look past the tariff debacle last year. So the point is, this is a new position from the Fed. And he's saying, by saying look past, he's saying, I'm not going to hike rates because of oil, because oil is likely going to, again, oil is a leading indicator to inflation. Energy is the currency of the universe. Oil and energy prices go up. Everything goes up. Everything. Okay. And so oil going to $112 a barrel last time I checked. That's a huge deal. And the Fed is saying, we're just going to ignore it. And that's a huge signal, guys. The Fed will not, what the Fed is saying is we're not going to hike rates into this. If anything, we're giving ourselves a forward pass to cut rates into this. We're going to look past the oil shock. Very, very key headline. And I'll remind you guys why. The United States cannot afford higher interest expenses. A lot of this debt was created at 0% interest. And now they're rolling it over at 4 to 5% interest. The 10 years at 4 point whatever. That's so expensive. They can't afford rate hikes. In fact, they might need rate cuts. And so the fact that the Fed is coming out and saying, yeah, we might be heading towards a global economic crisis, and oil, this oil market, this oil shock, I mean, it is unprecedented, the pace at which we will experience an oil shock. This will beat COVID. This will beat every other oil shock before us. But we at the Federal Reserve are going to ignore that. That's a huge signal. I do not want you guys to miss that. We'll keep an eye on the Fed. We'll keep an eye on the new Fed chair on Warsh that's coming in. But that was a big signal. Another really, really big one. This is data. This is not trying to track politicians' Twitter accounts and they're constantly contradicting themselves every hour. Okay. This is ISM services employment. Look at March, you guys. This came out today. Oh my goodness. That is not a month that's only a week into it. That is the March print. It looks like it fell off a cliff. It got hit by a missile, literally. Too soon. Look at that. And then on the right, ISM prices. And we're back to 2022 levels. So what does this mean? Stagflation. Employment is collapsing and prices are rising. Not good. In fact, this is the Fed's worst nightmare. Why is this the Fed's worst nightmare? Well, prices are rising. Inflation is upon us. I need to raise rates. Well, on the other side, employment is collapsing. What do? This current fiat experiment is running into a dead end. It's becoming a victim of its own self. What do? Yikes. So you kind of have these three options if you're the United States. You can forcefully reopen the strait. I'm sure we can. Now, when can we? How long will that take? And how many casualties will that take? We risk starting World War III. We risk so many casualties that are unacceptable. I highly doubt this. I think this would be a very risky strategy, but that's option one. The strait remains closed for a very long time, and we go forcefully open it. Immense amount of U.S. casualties. We risk World War III. That's option one. Option two is we negotiate a deal. Trump has extended the deadline 4 times, and at this point, if a deal is done, it will look like Iran won. Now, obviously, the U.S. media and Trump aren't going to market it that way, but that will be the conclusion. They kept the strait closed. The U.S. couldn't open the strait. They were accepting other currencies. The petrodollar is up to Iran in the Strait of Hormuz if they want to support it or not. And we'll see if Trump's ego can sustain this. Like today, I saw a headline come out that Trump says, I think that we should keep fighting in Iran and go take their oil, but supposedly the American people want us to come home. Now he's blaming it on us. So we'll see. Door 3 is print the money. And by the way, all 3 doors lead to the same inevitable path of printing the money.
The Federal Reserve, led by Jerome Powell, is effectively signaling that it is willing to ignore a major oil shock, something that historically would have forced aggressive rate hikes. And that tells you everything about the position the system is in right now. The U.S. simply cannot afford higher rates. With trillions in debt being rolled over at significantly higher yields, the margin for error is gone. So instead of tightening into inflation, the Fed is quietly preparing the market for the opposite, rate cuts, even as energy prices surge. At the same time, the data Mallers points to paints an even more dangerous picture beneath the surface. You have collapsing employment indicators alongside rising prices, a textbook stagflation setup, and arguably the worst-case scenario for any central bank. Because now the Fed is trapped. Raise rates, and you crush an already weakening economy. Cut rates, and you risk pouring fuel on inflation. That's the backdrop as we move into the next phase of this story, because while the U.S. is dealing with internal pressure, something much bigger is unfolding globally. A silent but aggressive shift in how the world actually moves money. Let's get back to the video.
Interesting data. The Chinese payment system, CIPS, crazy growth recently. Interesting, right? The assumption is it's because of the Strait of Hormuz and people using their payment system as opposed to U.S. dollar-based systems because of fear of sanctions. And to me, again, it doesn't really matter how we get there. The point is there's a monetary order seat change. There's no doubt about that. You got part of the world that's trying to remonetize gold. You've got part of the world that, Russia was kicked out of our financial system. So they've been selling oil for Chinese yuan for years. Since 2022. So the point is, the new monetary order, the future monetary order of the world is up for grabs. Make no mistake about that. Now, you could not like Bitcoin. You could think I'm an idiot. But the point is, it's up for grabs. The current monetary order is failing. The current fiat system is failing. And whether Iran, Russia, and China are going to try and push the world into this gold-backed Chinese yuan, or whether us that believe in Western ideals and open source software are going to pioneer and revolutionize Bitcoin. Understand this. We are entering a timeline where the future is to be defined by you. And I mean that. Don't let that point get lost on you. Like the strait where 20% of the world's oil flows through is adopting a brand new payment system before our eyes. It's happening. And all of us play a critical role in what the future will look like. I'll get into this in a second. So Luke charted Bitcoin over tech, and Bitcoin's been resilient, man. It really has. And again, it usually leads. And so is it smelling something? Is it something that we don't know? Free markets are the ultimate truth tellers. Bitcoin will figure it out before you will. Before the headline comes out, the market will figure it out. It's the most free and fair market we all have access to. It's the only free market left. So is Bitcoin sniffing something out? Is it sniffing out a Trump taco? Is it sniffing out a Trump uncle? Is it sniffing out the strait opening up to whatever, a lot of the East, which eases the pressure on oil? I don't know what it's sniffing out. Is it sniffing out that, Trump's new deadline, the market's expecting a deal, and tomorrow it's going to puke itself down because there's going to be no deal, and Trump is going to be embarrassed and have to come up with something else? I don't know, but it's been resilient. And I repeat my message. Now's the time to stay humble and stack sats. Turn on your DCAs. What are you to expect with a conflict like this, potential global economic crisis, oil prices through the roof? What's the expectation? What should you be on the lookout for? Guys, be wary that the Bitcoin price could nuke and puke at any moment. The global economy is extremely fragile. Everything is extremely fragile. You're seeing gold, U.S. treasuries experience risk volatility like it's Bitcoin, like it's Tesla. I beg you to earn more than you consume right now. Now is the time to tighten the belt. Make sure you're bringing in more cash than you're spending. Review all the debt you have outstanding. Make sure it's productive. Okay? Potential for some uneasy times, but this is where legends are made. This is where people buy low. And mind you, turn on the DCAs. Do not wait for, you're not going to time the dip. You're not going to be awake and online with a cash account loaded to buy Bitcoin at the pristine moment that someone flies an airplane in the sky that says, hey, this is the bottom. Log into Strike and click buy. That's not going to happen. A year from now, 2 years from now, 5 years from now, you're going to say, wow, I had a chance to buy Bitcoin with a 6 in front of it. I can't believe I didn't act with more urgency. I can't believe I was waiting for a 5 or a 4 or a 3. What an idiot. So be responsible. Be productive. Turn on the DCAs. This crisis can't last very long. This Middle East conflict, oil shenanigans, it can't. We're way too indebted for this to go on for years without any new policy changes or Fed interference. There's just no way. There's no way. Mathematically impossible.
As Mallers points out, the real story isn't just inflation, oil, or even war. It's the gradual breakdown of the current monetary order. Systems that have defined global trade for decades are now being challenged in real time. The rise of alternative payment rails, the shift away from dollar dependency, and the growing alignment between countries outside the Western financial system are no longer theoretical risks. They are active developments happening right now. As sanctions, geopolitical tensions, and trade fragmentation intensify, more countries are looking for ways to operate outside traditional U.S.-controlled financial infrastructure. And once such a transition begins, it's incredibly difficult to reverse. What starts as a workaround quickly becomes a parallel system, and eventually, a competing one. At the same time, there's a growing divide in what the future system could look like. On one side, you have nations exploring gold-backed or commodity-linked alternatives, attempting to rebuild trust through tangible assets. On the other hand, you have a completely different vision: open, decentralized systems like Bitcoin that operate outside the control of any single government or institution. And that's the real battle Mallers is pointing to. Not just economic, but ideological. What makes this moment even more critical is how markets are behaving underneath all of it. Despite extreme volatility across traditional assets, bonds, equities, even gold, Bitcoin has shown relative resilience. And historically, markets tend to price in reality before the headlines catch up. This could mean Bitcoin is already anticipating the next phase of this global transition before policymakers or the public fully understand what's coming. But even with that long-term perspective, the short term remains extremely fragile. In an environment like this, price swings can be violent and unpredictable. Liquidity shocks, geopolitical escalations, and policy missteps can hit markets at any moment. So as this situation continues to develop, from the Strait of Hormuz tensions to shifts in global finance, the key takeaway here is simple. This is not a normal cycle. This is a transition period, and how you respond during periods like this will likely define your position on the other side of it. If you found this breakdown valuable, make sure to like the video, subscribe to the channel, and turn on post notifications so you don't miss what comes next. And let me know in the comments, do you think the global monetary system is actually changing, or is this just another temporary disruption? Thanks for watching.